Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. I'm recording this Friday, July 5th. I hope you're all having a great, at least 4-day weekend, maybe longer. We're at it for a few hours today before getting back to the weekend, but we'll be back at it, of course, on Monday. In terms of the market, it's the same story. The NASDAQ and the S&P 500 look fine, look great, but if you dig not even like that far under the surface, even within those big cap indexes, there's really not much happening outside of a handful of stocks, literally, whether you're looking at new highs or percent of stocks above, moving averages or whatever. It's just a very narrow situation. Now, I will say on the positive side of things, I have seen in growth stocks a little bit of firming. We'll talk about software stocks are starting to come back some, which is obviously a big area that could, if that works, that could be a lot of leadership there. And I'm seeing some volatility contraction too. Now, 2 of the past 3 weeks, I think, right, have had these sort of midweek holidays, which have made things a little quieter and long weekends and all that sort of thing. So, we'll see what happens here as earnings season revs up. It starts next week, but really, 2 or 3 weeks down the line. We'll see what happens with earnings season. But I do think there's a lot of launching pads out there. But just like we've been saying for a while, most of the market is just kind of sitting there. It's kind of a washing machine environment, what I call it, which is just, things are getting tossed around left and right, upgrade over here, downgrade over there. This stock looks good. Next week it looks bad. It's just been a lot of that sort of action in growth stocks and otherwise, okay? So again, right now we're holding some cash, but also trying to give some room to some stocks, even if they do have these tedious pullbacks, because while there have been some breakdowns, a lot of names are pulling back, look bad. You want to throw in the towel, and then they start to rally back. So we're trying not to get too close to the action, but holding a chunk of cash on the sideline as cushion in Cabot Growth Investors Model Portfolio. We got knocked out of a name on Monday. We had taken partial profits, gave it some rope. It just couldn't hold up. We're up to 37% cash, which frankly is probably too, I would rather have it lower than that. I'm not going to buy just for buying's sake, but if the market can, continue to hang in there and some of the stuff under the surface firms up, we'll probably be putting some of that anyway back to work in the weeks ahead. Okay, let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Daily. You can learn more at marketsurge.com. And it's just the same thing. Here's the NASDAQ, really since the calendar flip, so to speak, into the second half of the year. Looks great. It's very extended, but there's no question the trend is strong. The S&P 500, same sort of thing, not quite as strong, but again, there's no question that the trend is up well above even its green line here, which is the 25-day simple moving average. But if you just go through, again, not to just make every video similar, this is IWM, which is small caps. This is MNDY, which is mid caps. This is the RSP, which is the equal weight S&P 500. What am I looking at here? XLI, this is industrial stocks, financial stocks, retail stocks. This is XRT. I'm flipping through these quick. These are just ETFs, just to give you a flavor. This is the New York Composite. Okay. Now, 2 things. Number one, all those charts that I showed you basically look like this, right? They basically have been going sideways since mid to late March, depending on what you're looking at. The second thing, though, is they're all kind of just sitting here. So you can look at it and say, well, if the NASDAQ's up here and this is down here, that's bad. And that is true because, at some point, if the NASDAQ falls 5%, which it's going to do at some point, right, what's going to happen to something like the New York Composite? It might come down. We'll see what happens. At the same time, a lot of this stuff is kind of just basing. And whether it's a rotation, which of course a rotation would be painful for the super popular strong stocks, and sectors. But if we do get a rotation, there could be a lot to sink our teeth into, and not just like tiny, small regional banks, but, some real sectors that have some legs, some growth stories to them. So we'll have to play that out. One thing I just want to mention, because I'm going to get into some of the good things and then get into stocks. This is an extreme example. I mentioned DraftKings, I think it was last week. Just kind of a kid scribbling on a piece of paper. This is just, First Solar, and it's had this huge consolidation, right? So it's early stage. It goes wild. It breaks out at 200, if I can get the daily chart back up. It breaks out at 200 and goes all the way up here, holds firm, and actually hits 306. So call it $300. And then it just comes right back down. Now, I know there was I'm not getting into politics. I know there's the debate and all this stuff, but it's a liquid stock with good numbers, and the stock literally went from 200 to 305 back to 220. That's just kind of the action that you're seeing where it's things look pretty good for 2 or 3 weeks. Is it setting up? It looks good. There's a lot of buying power, huge volume. and then it kind of goes poof, whether it's on news or not. It's not like earnings report. It's just kind of on sort of news that may or may not happen. We don't know. And yet they sell the stock off 25% or whatever it is. So it's just kind of, that's why I kind of say less is more. If you're chasing your tail a little bit in this environment, chances are you're just going to be kind of over trading and just kind of eating away at your account just by getting in and out of stuff, without any real, progress. Okay. Now, with all that said, QQQE is the equal weight NASDAQ 100. And this is loosely, if I can call it up here, market surge. This is something I do watch because it's a NASDAQ 100, it's just equal weight. So it's NVIDIA and all that, but they're just 1% of the index. And of course, it's chips and medical and all this. And again, you just kind of have this nice base. I'm not a chartist like this where it's, ascending triangle, but I'm just saying you just kind of have this nice consolidation in here. And if it, not just pokes up by $1, but if this can really get a head of steam going, I think that would be a sign that things are broadening out. Again, earnings season will be key. The other thing is just when you look at some of the growth measures, so this is the IBD 50 index. Again, it's basically a bunch of stocks that have good relative strength and good earnings growth, which is pretty much the pond that I fish in. Is it running away on the upside? No. But is it kind of holding, it's kind of stronger than a lot of those charts like, if we look at, just pull up, this is the mid caps, right? Not terrible, just kind of sitting here. Maybe it can get going, maybe it doesn't. But you can see it's kind of sitting right in the middle of its range, call it. But you look at something like the IBD 50 index, and it's kind of above the range and holding above the range. It's not in some massive rally phase, but it's holding the 50-day line and the prior highs. The momentum fund, same sort of thing. This is MTUM, kind of broke out, came back, but it's just kind of holding above there. Now, can that change next week? Yes, of course. But I'm just seeing a little bit of more firming, like I'm trying to say, in the growth things. At the same time, and again, I wouldn't say this is super definitive, but here's XLP, which is consumer staples. It's, again, there's no rush into defensive stocks at this point. And I know there's other factors like interest rates and the Fed and the dollar, but it is what it is to me. It's really not going anywhere. XLU, utilities, big picture, it doesn't look bad. But it's certainly not like people are racing into it. It certainly had a pretty good pullback here after the prior run. XLV, which is kind of like big cap healthcare. Again, it kind of rallied up here, but it's just stalled out. It's gotten hit a little bit recently. So I'm not saying that the defensive stocks are super weak like everyone's selling them, but there's been no rush into defensiveness at this point where, even though the market's very narrow. So those are just, there's kind of, in this type of environment, you're kind of looking for small positives and small negatives, and that's what I'm trying to point out. But the bigger picture is just for most stuff, including leading stocks, they're sideways. If you want to say sideways to up, I'll grant you that. But there's just a lot of washing machine up and down type action. So, you got to pick your spots, honor your stops. In something like Top 10 Trader, we've been taking partial profits, somewhat quickly on the way up and then seeing how it goes from there. Okay. Now, the other piece of good news is, whether it's top 10 every week that we do our screens or whatever, it's not hard to find things that look pretty good and are pretty good setups. Doesn't mean they always click. Sometimes the setups don't actually click and, prompt a buy signal. But there are a lot of stocks, like I said, that have these consolidations that have shown some strength that are getting pretty close. More recently, we've seen software stocks come back. Actually, I'll mention IGV, which is kind of the software fund, which of course is big cap weighted. They had a huge shakeout here. This was the Salesforce Nutanix day of death. And, the stocks have really the sector has really come back challenging its old high. Okay. So ServiceNow, NOW, again, it's straight up from the bottom at the moment. I'm taking that as a sign of strength. In this environment, a lot of things have been, rejected at resistance. So we'll see how it goes here next week. They got earnings like everything else in, I think it says July 24th, maybe. So they're coming up here in 3 weeks or whatever. But, if it can kind of calm down here, break out, that would be a good sign for the group. Some other ones, Monday.com is an Israeli firm. It's shown a lot of volume clues like along the way. We actually dabbled in this last year. It didn't go anywhere with a small position. So it's kind of had this choppy action, but it's starting to grow up. The sponsorship's been going up. The sales and earnings are great. The projections are solid. And you can just see after this latest move up on earnings, the stock has, if we get to the daily chart, here's the latest move up on earnings, and it pulls back and then it's up in here. But net now you kind of have this little consolidation, part of this bigger consolidation. Anyway, MNDY looks interesting. DataDog, I think I mentioned this last week. Same sort of thing. Didn't really, it didn't implode or anything. It just had this kind of grinding, tedious correction for a few months. And now it's trying to poke up. Not the biggest volume in the world on the upside, but again, earnings here in, I guess, early August, call it, but approaching its old highs. And AppLovin, which is interesting. We'll see how it goes here. The stock had a pretty big shakeout here on some news that ended up not being real, honestly. And it's kind of marched up here. So it's actually hitting new highs today. We'll see how it closes. Again, hitting new highs has been, for most stocks, kind of a short-term, I don't want to say a sell signal, but stocks usually back off. But overall, this one looks pretty good as well. In the chip arena, so ASML, again, I think I mentioned this. It's kind of just if you're kind of a IBD person, which, whatever, but this is sort of a second stage cup with handle, had some tightness in here. It's $1,000 stock, but whatever. I think it looks pretty good here. Got earnings here July 17th, so that's obviously going to be key. Teradyne is one of these turnaround chip stocks. Like if you look at the numbers down here, you can see sales and earnings, it's all red. Red, not so good. Green, good. Red, not so good. Or I guess blue is good. But, this is one of these turnaround chip names where they're looking ahead, and it looks like, the bottom is in for the sector. It had this big breakout, and it's just been, I just find it intriguing how it's, I don't want to say it's tried to pull back, but it hasn't been able to. Now, it hasn't been able to really take off either above 150, so we'll see what happens. But Teradyne TER is interesting. Reddit, RDDT, recent IPOs are tough just because they're so hectic. And even if you just step back, again, it's just there's a lot of this sort of thing going on in recent weeks. But if you look at the weekly chart, it kind of, it dove during the market's correction. It snapped back when the meme stock, GameStop first started going nuts and stuff. But it's been volatile, but kind of held the 10-week line in here and sort of calmed down, and now it's starting to follow through to the upside. It's a hot potato, but I am keeping my eye on it, and it was in top 10 trader this week, RDDT, okay? In the healthcare field, this is one I keep a distant eye on, and I have for months. This is Neurocrine Biosciences, NBIX. You can see on the chart, it's not as, you saw Reddit like this. It's not as dynamic, but it's got this tight, long consolidation. In fact, Market Surge lets you do this. I can't get it, but it's like 12% deep for the months. It's not like it corrected more than 10 or 12% the whole time. Very tight in here. And I mean, you're just really looking for, can it change character and get going? Okay, it's got great sales, great earnings, good numbers, good products, and all that stuff. So we'll see how it goes. But NBIX, an interesting setup. GE is kind of an interesting setup too. It's later, I don't want to say later stage, but it's had a huge run here. But I find it intriguing that it hasn't pulled back. We've even seen some weakness in some aerospace stocks. This is GE Aerospace, the symbol's GE, but it's one of the three spinoffs there. But you can just see it really hasn't been able to pull back much yet. Could it break down? Of course, but if it breaks out and the market broadens out, that would be kind of interesting. And then last but not least, not in terms of a sector or theme, I guess, it's just I'm seeing a little bit more, I want to say commodity or like heavy cyclical, I guess I would call it. So this is Diamondback Energy. This is obviously commodity, FANG, FANG. Had a nice run, nice breakout and run. And again, you just kind of had this grinding correction that was tough to sit through, unless you had it from a year ago or something like that. Just kind of a grinding correction, clearly living below the 50-day line. But now it's starting to come back. Obviously, oil prices will, have an impact on it. But overall, that's kind of interesting. Gold stocks, not my, cup of tea. But this is Agnico, AEM, obviously one of the big liquid names in the group. Came out to new multi-year highs. We had it in top 10 and took a profit up here. And then it kind of broke down, but it didn't, that one breakdown day, it never kept going. It just stopped going down there, and it's kind of been crawling higher, and now it's rebounding up. So now net, these gold stocks, not to get too inside, in the weeds, but you kind of have like 6-7 week consolidation. Newmont Mining, NEM is another one. Not as strong. I mean, you can see how this is way off its highs. But it did have the off the bottom rally, which are always tricky because they run into resistance, right? But this ran into resistance, and again, just has this, 7 week consolidation, call it in here, challenging its old highs, And then just one that's way off the radar screen. We had this in top 10 and took our profit. This is Kirby. It's like a shipping stock. The earnings are just nuts. At some point, of course, that will turn around, but it looks like for many quarters it won't. And the stock has been one of these, you can just see it's been this sort of sleepy thing, and it breaks out here, and it's just kind of going, and then it really accelerated on earnings. And here you have kind of the first pullback, consolidation, or whatever. Could it break down? Like I said, in this environment, you can't look at this and say, oh, this is definitely going to find support at the 50-day line. You don't know. Like this, it could easily cheese through the line if the group gets weak or the market sells off. But at the same time, after a very good run and a lot of buying power here after earnings, we're kind of having the first multi-week consolidation. So if it can kind of hold up and maybe eventually resume, looks pretty good. Back to the market again, it's just kind of a split decision here. The NASDAQ, the fear is that if the NASDAQ, which is clearly extended and all that, pulls back here, okay? I don't mean in like one day, but if it pulls back over 2 weeks or whatever, if all these things can't get going when the big cap indexes are going up, what's going to happen when they go down? But you really don't know. There could be a rotation. You could just have this thing kind of chop sideways and the rest of the market broadens out. You could get this could be a divergence where there's some sort of intermediate term market top, So instead of trying to game the, predict and all this stuff, I would just say most of the evidence, intermediate term evidence, is sideways. The longer term evidence is positive. And even the stuff that's tedious is still mostly positive as well, intermediate to longer term. But you just want to kind of pick your spots and be selective. I wish, and I'm waiting for, and I think we're going to get back to sort of the November, December, January environment where it's a little bit more about throwing darts and making money, but that time is not now. So right now we're still, cautiously bullish, I guess I would say, holding some strong things, picking some buys here and there, but also holding a chunk of cash, waiting for the environment to really get more in gear. Okay, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.